Hi, I'm Kerry Craig, Global Market Strategist. In this video, I'll be sharing our views on the equity market. The bullish case for increasing equity allocations is that the world is facing what may be the most talked about recession of all time, and this is reflected in current market pricing. The bearish case is that equity markets only reach their bottom once the recession has started, and not before. We can see both sides of the argument, especially given how unpredictable markets and economies have been over the past 2 years, as well as a significant drawdown already experienced in equities in 2022. Now, the end of the rate hiking cycle could provide support for equities, with the US market having risen following the last rate hike by the Federal Reserve in most, but not all, prior rate hiking cycles. However, equity markets are likely to remain sensitive to the bond market in the near term, which could impact valuations. What drives our cautious view towards equities is the scope for further earnings downgrades at a time when equities are fairly valued rather than being cheap compared to history. Consensus forward earnings expectations are relatively high and have not fallen to the same degree when compared to prior recessions. The pressure on profit margins and top-line revenues may increase as the economy slows, leading to further downgrades in earnings expectations. While some of the earnings decline may already be reflected in today's pricing, the risk of a more material decline is not insignificant. For these reasons, we prefer a quality bias when it comes to the equity market and more defensive sectors. This extends to a more global view of equity markets as the outlook for Europe improves and relative valuations move in favour of markets outside of the US. Emerging market equities have found their footing and sentiment towards China has improved. A number of the themes from 2022 have now reversed. Inflation is falling rather than rising, China is looking to expand rather than contract, and policy rates are pausing rather than rising. This reversal in themes is much better for emerging market and Asian equities. Near-term economic and policy uncertainty may translate to a continued equity market volatility and warrant a degree of short-term caution. However, a reversal in many of 2022's themes and better valuations suggest the scope for better returns has increased. Thanks for watching.